Good evening, all the joinees. Hi, this is Prajakta. I would like to warmly welcome you all on behalf of NGEN Research. So welcome to this webinar session. Today's Friday's topic for our webinar is going to predominantly revolve around taking an overview of Indian markets. And in addition to that, of course, comparing Indian sectoral indices with with each other and of course with global indices. So we are already into 6 months of 2023. So we'll definitely take a look at the year-to-date performance of each of these sectors, and of course the broad-based indices with respect to a mid-cap, small-cap, and of course large-cap indexes. Once that is through, we'll dive in further to compare it with the global indices. In addition to that, we'll have a look at the point-to-point analysis with respect to lump sum. How would lump sum investment in that particular sector would have behaved over a time period, creating 5 different scenarios. We will then understand what is the risk versus returns scatter plot analysis of each of these sectors. Where do they exactly get plotted on various time periods? We'll definitely see how we can do that. Next, we'll move ahead and understand the drawdowns analysis and the correlation analysis. So what drawdowns analysis will help us in doing is it will help us in understanding what is the magnitudes of losses that have been experienced by these sectors, and of course the underlying funds in each of those sectors and how have they recovered from each of those losses. So it will typically help us in understanding what is the strength of the sectors to recover from a loss. That is something that we'll have a look at the drawdowns analysis. And next is the correlation analysis. We will see how do each of these sectors correlate with each other with respect to their movements. So their index movements, of course, when we are referring to indices, their movements with respect to each other. So we'll have a look at how correlated are these specific indices. So let's, of course, now begin. Of course, towards the end of the session, we will throw the forum open for a Q&A session, wherein you can ask your questions either by typing it in the chat box or directly unmuting yourself to speak. So let us now begin. Let me directly go to NGEN Markets, and this is specifically our platform. Once we land here, the first tab, which is the Markets tab, is here where we'll see all of the indices which are listed right here in the form of line, in the form of rows. So what we can see is we can just click on the particular row that you want to add, and that particular index level will get added for our analysis. So for an example, if I want to first add a Nifty 50, so just click on Nifty 50 as a row item, and then this level gets plotted. Now, let's say I want to change the date. We have given a changing start date option right at the top. If you just click on this, you can definitely choose a time period of your choice. So let us do this analysis initially for the last 10 years. So I'll just click on this drop down and I will see, I'll put in a date of, I'll choose 2013. So July of 2013, that's typically 10 years from now. So we'll check how Nifty 50 with respect to their returns really gave. So Nifty 50 gave in a 229% cumulative or absolute returns over a 10-year time period. Now, if you want to further add in one by one more and more indices, all you need to do is locate that specific index and click on it to add in the line chart. So for an example, let me now add, let's say, a global index to it. So here, if you scroll down in the market section itself, on the extreme right-hand side, down here, we have global world equity markets as well. So let's say I want to plot in a Dow Jones. Let me also plot in a FTSE 100, which is an indicator of the UK markets. I'll just go ahead and add that, and maybe a Nikkei of Japan. So once I have plotted all of these in the form of a line chart, I just go at the top and I will see that all of these levels are now plotted. But of course, all of these levels have a different level that they are currently trading into. Definitely, they have different launch dates, and their current levels are also different. Now, in order to ensure that we make a fair comparison, which looks fair as well, what we have actually given is you as a rebase button. What this will do is it will take all of these start levels to a common start point of 100. So now, if I just click on this, you will see that all of these levels now start from a common start point, which is now 100. And we can see that, of course, returns will not change. In this case, we can see that Nifty 50 gave in a 229% return. Dow Jones gave in a 129% return. FTSE, on the other hand, gave in a meager 17% return, so just about 18% return. And for an example, Nikkei gave in a 134% return, which is listed right here. we can actually, using this rebase function, give it a starting point of 100, which is a common start point, and see how these levels changed over the time period. Of course, you can change the time period. Now let us do an analysis for the last 3 years. That's typically post the onset of COVID. How did these levels actually react after COVID, right? So just from this drop down, just choose the level that you typically want. So 2020. And because I'm choosing a post-COVID scenario, so I'll just take in maybe a 1st of April. Right, 1st of April 2020, and I can see that these have been the performances. So in terms of post-COVID, we can see again a Nifty 50 giving the best returns among the lot that we have definitely chosen. Now let's go ahead and add in some specific to India. So of course, we have added in Nifty 50. Let me now remove these 3 global indices, and let me see how is the performance of specifically Indian indices among each other. So firstly, I'm going to consider the broad level indices. So the large cap, mid cap, small cap, all of this with, of course, I mean, Nifty 50 is, of course, large cap. So for that, I have to remove all of this that I currently have in this list. Otherwise, the chart will get extremely crowded. So what is the procedure to remove? Just locate, I mean, go back to this particular section and click on these market levels again. When you click on Dow Jones again, this level will get removed. As you can see, Dow Jones is removed from here. Again, I have to remove FTSE and a Nikkei. So I'll just click on FTSE again, I click on Nikkei again, it will get removed. So basically the procedure is click to add and click to remove. It's that simple. So once this is done, let me now add in a Nifty mid cap 150, sorry, Nifty mid cap 100 and a Nifty small cap 100. So for that, I'll just locate it right here and I'll just plot it. Once I click on it, it will get plotted. So now I can typically see that among this lot, if these 3 were something that I consider, Nifty 50, which is, of course, an indicator for the large caps trading, it has actually not managed to beat mid cap and a small cap. So in other words, mid cap and small cap in specifically post-COVID have actually managed to beat the Nifty 50 index, which is typically the large cap index. Right. So you can, of course, check how even broader universe, how did that perform. So for that, I'll just go ahead and add in the Nifty 500. And I can see that a Nifty 500 again gave in a 145% return over, of course, 3 years time period. You can definitely change the time period. You just have to click on start date and that will typically change. That is how you can definitely check how these levels or these indices performed over a time period. Now, in addition to this analytics, you can also take a screenshot of this. For taking a section specific screenshot, we have given a small camera button. Wherever you can see the small camera button, you can take a section specific screenshot of that specific tab. But now, let's say you want to take a dump of this entire market levels that you have added. So Nifty 50, Nifty 500, Nifty mid cap and a Nifty small cap. All of this from 2020, you want it in terms of Excel. Okay, because you want to do further analysis of that, or maybe you want to keep it for your own record. So that how can you do that? For that, just click on the small blue button, which will export all of these indices historical prices into a form of an CSV file. So that can be definitely opened into Excel. So just click on this, it will get downloaded. Let me just show how that will look like. So just open it from your downloads, and this is exactly how it will look like. I hope my Excel sheet is visible as well. So let me just, yeah. So this is how these levels will look like. So as on 2nd of April 22, Nifty was 8,253. And after that, currently it is somewhere around 19,500, just close to 19,500, right? You can definitely take a dump of all of these into Excel sheet and you can keep it for your record. These are the full columns that will get downloaded. Once this is through, let us now go ahead and compare all of these specific sectors, or maybe the broad level indices that we have added in the compare section, and add in the mutual funds category averages of these specific sectors or of these respective sectors, and check as to what are the CAGRs of the category averages and vis-a-vis the broad level indices. So how are the mutual funds that are currently trading in each of these categories, how are they behaving? Are they behaving in line with the markets, or what is ultimately their averages? So for that, directly head over to the compare section. When you head over to the compare section, you will definitely see that you can definitely add in funds from here, stocks from here. In addition to that, you can add indices from here, add other items, search indices. So I will just search in these 4 indices. So Nifty 50, it'll get added as a row item. I want a Nifty mid cap 100. So that will get added again as a row item. I want a small cap as well. Once these indices are added, I will now add the category averages of all the large cap, all the mid cap, and all the small cap mutual funds trading in Indian markets. So how do I add category averages? Right below search indices, you have a tab to search category averages. There is where I'll add large cap category average first. So a large cap. I'll just search for large cap funds. And this is how the category average gets added. As you can see, category average large cap funds has now gotten added here. Now I'll go ahead and add in a mid cap average. Search for the mid cap and it'll get added. Again now for a small cap. Once this is true, I have 3 category averages and 3 indices. Now let me just sort this on the basis of CAGR. But before doing that, let me choose a common start date. How do you ensure that you choose a common start date for all of these analysis is right here. So there's a return columns, and just beside that, there is a settings wheel. You just click on that and specify the common start date that you want to run this analysis for. Only then in that case will be a fair apples to apples comparison. So let us do this analysis post-COVID initially, and then let's do it for the next for the last 5 years. So 2020, let's say 1st of April, and click on go. Okay, once this is through, just click on CAGR as a parameter. Of course, there are a host of parameters. I'm just considering CAGR for the time being. So I can see that I've currently sorted this on the basis of ascending order, and I can see Nifty 50, which is, typically it tracks all the large cap funds, right? So the CAGR of Nifty 50 is 29.63. On the other hand, the category average of all the large cap funds which actually follow Nifty 50, or for that matter Nifty 100. So we can definitely add in a Nifty 100 here as well. So we'll get a better idea again, because of course the universe becomes a little larger. So I'll add in a Nifty 100 here as well. Once this is through, I'll just click on CAGR and I'll check. So Nifty 50 is right here, 29%. Nifty 100 CAGR is 28%. And these mutual funds, the category average of all the large cap, has actually not even managed to beat either Nifty 100 or a Nifty 50 with respect to CAGR into consideration. Now let us go ahead and check how does it behave for mid caps. So conversely to large cap fund category average, we can see that this particular small cap, for that matter, small cap category average right here has actually managed to beat even Nifty small cap 100 in terms of CAGR. So Nifty small cap 100 CAGR is a 41.69%. Conversely, the mutual funds, the category average of all the mutual funds, small cap mutual funds taken together is a 44.99, close to 45%. That's definitely a good thing that it has managed to outperform even the benchmark under consideration. Similarly, for mid caps, we can check that category average of mid cap has actually not managed to beat a Nifty mid cap 100 as a category average in this case. Next, we can move ahead and check how do these specific indices perform in case of Sharpe ratio. So what Sharpe ratio tells you is what are the risk adjusted returns of each of these category averages. So again, the procedure is same. You just have to sort this on the basis of ascending and descending order, and we can see that category average of small cap and mid cap is actually the highest, right? So it's a 2.01 Sharpe ratio in case of small caps, and mid caps is 1.63. And with respect to their respective indices, it's right here. On the other hand, we can see that category average of large cap is the lowest among this lot. And typically 2022, all the large cap, as we are aware, they did not quite perform very well, right? You can definitely do this analysis by coming to years wise analysis. This will typically help you in understanding how did these specific row items that we have in the main list performed across years. So just for that, just head over to the years tab and choose any particular year. So for that, for an example, let's take 2022. In this case, a Nifty small cap 100, which is a benchmark, actually given a negative 13.80% returns. On the other hand, small cap category averages given some amount of positive, but definitely little positive return. On the other hand, the large cap category averages, Nifty 50 given positive 4.33. On the other hand, the large cap funds taken together on an average giving only a 2.02% return. This is this analysis is something that you can definitely do with respect to the indices. Let us now move ahead and understand how you can actually plot some sectoral indices in terms of a line chart in the markets tab. For that, again, head over to the markets tab. Okay, sorry. Before that, let me tell you how you can save this list. So once you've added all of these items, you need not, repeat this exercise again and again. Once you've added this one single time, it becomes just one single time exercise to just save this as a list. Once you've added this, just go over here at the top and save this as a list. So let us just name this as July review. So July 2023 review. And you can actually save this as a list in your my lists. So once this is saved, next time when you log in on NGEN Markets and you want to do the same analytics, definitely you can do it within a single click. So just go to my list, locate the name that we just saved. So it will be somewhere, of course I saved it, so it will be July 2023 review. That's right here, 7 items. Just click on it and this list will get loaded, and you can definitely go ahead and do your analysis. Let us now move ahead and see how these sectoral indices of each and every sector in Indian markets actually performed in the last 5 years or last 3 years. For that, again, head over to markets tab, and let us just remove all of this. So this is through. And now we are keeping only a Nifty 50. And let me add in a couple of sectoral indices. So I'm adding a Nifty Auto, I'm adding a Nifty Pharma, a Nifty IT, FMCG, and let's say a bank. Of course, you can add as many as you like. I'm just taking some examples. So once this is taken, I will see that all of these levels have been plotted here. And I can typically see that pharma, if the time period is specifically chosen as 2020 or 2021, typically it was the most outperformer of among all of the lot, which is definitely reflected right here. The neon line of Nifty Pharma is at the top here, when the time period was typically closer to COVID times. So it's right here, it is at the top. You can definitely zoom this in. Of course, there are a lot of indices here, so zooming in will definitely help. So you just have to click on this and select the time period and zoom it up. So you can see that in typically this period, so 2020 till up to a 2020 end or a 2020 to 2021 beginning, we'll see that pharma was the one that was outperforming the entire lot. After that, of course, it dive down a little lower, and that is the analysis that you can definitely do in the market section itself. Now, again, if you want to further drill down this analysis and actually take a snapshot of everything that you currently have in the markets tab, not just a section specific snapshot, then we have something called as a market wrap. So what market wrap will help you do is, whatever are your selections currently, basically whatever are your active selections, it will download that into form of a PDF. These reports are going to be co-branded. So how do they look like? So let me just show that to you. So just click on this market wrap icon, and you will see that an entire PDF will get captured. Now this will not just have our active selections, but it will also show the top 10 BSC or of course the NSE between, there's a toggle button, by the way. So here, because the toggle is at NSE, I can also see the top 10 performing NSE sectors and of course the worst 10 NSE sectors right here. Currently the time period is set as 12 months. But I can definitely change it to 6 months. So that will typically give me a year-to-date performance. So in this case, we can see that PSU Bank, Realty, and PSE and Auto, of course, these are the best performers. Worst performers, on the other hand, is media, energy, services sector, and some amount of IT as well. You can definitely take a dump of it into a PDF, and this is how it will look like. So of course, this is going to be co-branded. You can see that on the left-hand side, currently it's NGEN Markets logo, but when you download that in your login, you will have your own company name and logo appearing here on the left-hand side. This is how you can take a dump of the entire market wrap. Whatever are your active selections, that will get downloaded. Let us now move ahead and add in these specific sectors for comparison in the compare section. For that, again, head over to the compare section. And when you head over to the compare section, just remove all of this. Okay. There's one option wherein you can add these sectors one by one in the compare section, or alternatively, you can definitely add it in one single time and then save it as a list. So similarly, I've actually saved in a list of all the NSE as well as BSE sectors. So I'll just use that for this webinar sake. That will be definitely time saving. So let me just locate that specific list. So let's consider all the NSE indices. So there are 15 of them. We have just made a list of it, and you just saw how easy it is to, once the list is saved, just click on it and all the items in this list will definitely get loaded in the compare section for your analysis. So now let's just move ahead and do a drawdowns analysis of all of these sectors that we have in this case. So for that, directly move over to the drawdowns tab. Drawdowns analysis will help us to understand which of these sectors is actually the most resilient to recover from a loss. Okay. At some point of time, these sectors is definitely, depending upon the business cycle, are definitely going to face some amount of losses, right? It will definitely go down. But what is really important to note is how quickly do they recover from that loss. So for that, let's consider a time period of, let's say, 5 years. So let me just take this as 2018. So let's say 2nd of July. And from 2018, what have been the worst drawdowns of all of these sectors? Those are mentioned clearly in these size. So we can see that if I sort this on the basis of their sizes, I can see that Nifty PSU Bank as a sector recorded the worst drawdown. So it was a loss of a magnitude of 68%. This happened over a time period of 413 days. Okay. After taking 413 days to fall 68%, this PSU Bank as a sector actually recovered from this entire loss, and that recovery happened in 635 days. Okay, all of these are in working days and not actually, these are basically trading days, working days, and not just calendar days. So this is something that we can definitely see. Now let us have a look at which was the sector which recovered the quickest from its worst drawdown. How do you do that? Just click on recovery as a parameter, and you can see that Nifty IT, which actually due to the global layoffs that were happening in the last last year, entire year 2021 and even 2022, we can see that it recovered. It fell 33% from 2018, and actually it managed to recover the quickest among the entire lot. Right, it recovered from the entire loss of a 33% in 83 days. If we now change the start date to, let's say, 2021, we will definitely see how did the loss change from 2021 and how did it recover from that period. So possibilities are multiple. It's just that you can definitely explore all of this. So just change the start date and just click on recovery, and you will know that which among these sectors recovers the quickest. Now we can also do a drill down analysis on any of these sectors by clicking on this line chart. So for an example, I'm doing this analysis for a pharma. So I just click on this and this gets opened in a new tab. So what this tells you is the index level. What was it? So it was 10,661. When was this at a 10,000 level? As on 7th of September 2018. From 7th of September 2018, there was a 39% loss that was recorded by this particular sector of Nifty Pharma. And after falling 39%, the levels were actually 6,432. Now, to fall this much, this particular pharma as a sector took how many days? So it took 563 days, which is reflecting right here. So 2018 onwards to 2020, that's typically 560 odd days. Right, and after that, the index in this case actually took just 93 working days to recover this entire loss, and this recovery happened on 30th of July 2020. Now this is also represented in the form of these gray areas and these white areas. So these gray areas reflect the loss periods or the drawdowns periods, which is right here. So this is the worst drawdown when the index was falling. And after that, if I just try and hover on 30th of July 2020 and try to just locate it somewhere here, I will see that this particular price would have been reached. So let me just locate it for you. So 30th of July, so somewhere here. So if I just try and hover somewhere here, I can see that this level of 10,661 is almost breached. So 30th July, it reached 10,766. That's the date when it actually recovered, and that's why it is termed as recovery date. You can definitely check this for any particular sector by just clicking on this line chart or this chart icon. This is the drawdowns analysis. Let us now understand the risk versus return profiling of all of these sectors taken together. For that, let us directly head over to the risk versus return scatter plot. This is the tab right here. So first of all of these sectors will get classified or plotted on the basis of their risk and as well as their returns. So for risk, we consider the standard deviation in terms of the annualized risks, which is plotted on the x-axis. On the y-axis, we have annualized return. Now these specific sectors will get classified in 4 different quadrants. First one being low risk, high return. Second one being low risk, low return. Third is, of course, high risk, low return. And fourth is high risk, high return. Now, the more the sector or a fund, or for that matter, even a stock, gets plotted on the right-hand side, the higher is the level of risk that it takes. So you can see that in this case, the average, that's 15% to a 36% is the range on our x-axis. And we can see that everything that gets plotted somewhere after 26, which typically seems like an average or a midpoint of this particular line chart, is typically higher risky as compared to everything that falls on the left-hand side. That is exactly the reason why we have high risk right here on the right hand side. So everything that's plotted on the right hand side of this particular horizontal line or a vertical line is definitely higher in risk. On the other hand, everything that gets plotted on the upper quadrant of this entire graph will definitely report returns, or record returns of a higher magnitude. On the other hand, the ones that get plotted lower will definitely have returns which are lesser than the ones that are above. So let's do this analysis. Of course, this can be customized using the start and the end dates. We have provided those 2 parameters right here. So let's just do this analysis for let's say a last 5 years. So 2018, 2nd of July, and click on go. So what we can typically see is Nifty PSU Bank definitely gives the best return, but that comes at a level of higher risk as well. On the other hand, Nifty, let's say Nifty Pharma, okay, it gets plotted on the left-hand side of the quadrant as compared to a Nifty Media or a Nifty Metal, right? That typically means it takes lesser amount of risk, but it also gives in lesser returns. That's because Nifty Metal is right here, which is giving a return of a 17%. On the other hand, a Nifty Pharma gives in a return of 10%. That's typically the reason that it has gotten plotted lower. On the other hand, Nifty IT is somewhere here. So with the same level of risk, almost a same level of risk, Nifty IT actually gives better returns than a Nifty Pharma, which is visible right here. Of course, this is in the time period of the 5 years that we have chosen. You can definitely customize this. And of course, these risk versus return profiling will definitely change. That's how we can check with respect to the scatter plot as to how these particular indices actually, get plotted on the basis of their risk that they take. And of course, with respect to that, the return that they give. That's the risk versus return categorization of them. After this, we can definitely head over to the correlation analysis. What that will help us in understanding is in the time period that is currently chosen, so from 2011 to 2023, what are the correlations of each of these sectors with each other? So in correlations, it's a metric structure. So we show correlation of one sector with the other. So within a pair of sectors, we can definitely check what are the correlations. What correlation analysis tells you is how coordinated are the levels or are the movements of the levels of each of these indices. So let's take an example. So for an example, a Nifty Services and a Nifty Pharma, or let's take a IT and a Pharma example. So in case of a Nifty IT and a Nifty Pharma, in the last 12 odd years, so 2011 onwards till 2023, there's a correlation of 0.36. So it's definitely on the lower end, because correlation typically ranges from a -1 to a +1. So more closer it is to 1, that typically means that the movements or the 2 sectors are very closely or very thickly correlated. That means if one sector goes up, the second, the other one will also catch up. So for an example, in this case, so we see that Nifty Bank and a Nifty Private Bank, which makes sense, they are very, very highly correlated. So if Nifty Bank goes up, 98% of the times Nifty Private Bank is also going up. That is typically what is the thick or the closer or a very strong correlation which is existing between these 2 sectors. On the other hand, within a Nifty IT and a Nifty Pharma, it's not very closely related. So for an example, a Nifty IT is going down, then there's only a 36% chance that Nifty Pharma is also going down. So that's definitely a lower correlation between these 2. On the other hand, if we just go ahead and look at Nifty Realty and Nifty Metal, so there's a correlation of a 0.63. That's definitely not on the lower end, but not as high as a 0.98 or a 0.87, right? So this is the correlation analysis that you can definitely do on sectoral basis. A highlight of NGEN Markets correlation analysis is that it is calculated on the basis of their daily index movements. Of course, because these are sectors, on the basis of daily index movements. But if these were some funds or stocks, on the basis of their daily NAV movements, that is what we do. So we do not even leave a single data point. Typically, we have 260 data points every single year. That's because we consider 260 as a working days in a single year, and therefore the correlation analysis is pretty accurate. Okay. That's the correlation analysis that you can do. Now let us move ahead and do a point-to-point analysis. So for an example, if let's say a 10 lakh rupees was invested in each of these sectors over a time period, how much would that have returned to the client, or for an example, anyone, right? So for that, directly head over to point-to-point analysis and put in a lump sum investment value of, let's say, 10 lakh rupees. And then after that, you can typically create 5 different scenarios. They have given you 5 different buckets, which are again customizable. You can just put in any start date or end date of your choice, and you can check as to how were the performances of each of these sectors in that particular time period. So in this case, I've taken an example of a financial year 22-23. I just click on sort, and I can see that if 10 lakh rupees was invested as on 1st of April 2022, and of course exited on 31st of March 2023, this would have returned, a Nifty PSU bank would have generated the maximum. So 10 lakh would have become 13 lakhs. On the other hand, in FMCG, it would have become a 12 lakh 50,000. Because this is a financial year, I can definitely convert it into percentage by clicking on either annualized or absolute. Of course, if the period is less than a year, you should typically see absolute returns, and then that will actually give you a better idea. So for an example, in this particular case, which is right here, the third scenario that I've built is typically a union budget scenario. So 1 week prior to the budget, 1 week post the budget. If you want to check what were the performances of each of these sectors in that particular scenario, just click on absolute. And I'm clicking on absolute is because this period is less than a year, right? So clicking on annualized will not actually give a correct picture. So if the period is less than a year, you should definitely choose absolute. And you can see that in this particular 2-week time period, which were the sectors that fell the worst, right? So Nifty Metal went in by a negative 13.88. On the other hand, the best performing sector was a Nifty IT, which gave in a positive return of 2.75%. You can typically build any particular sector and actually check how is the performance of that particular sector in the time period that you have chosen. Once this is through, then you can definitely, as I was just saying, you can definitely save this as a list and then keep it for your record. Once, I mean, this is just a one-time activity. Once you've saved this, you can definitely refer it back whenever you need it. So similar to NSC, you can definitely create a list of all the BSE sectors as well. We have definitely saved it for you. So let's, before wrapping up, just let's have a look at the BSE sectors, all the sectoral indices, and check their calendar year-wise performances. So there are 17 of the BSE sectors, and directly head over to the years tab, which is the 4th tab right here. When you just click on years, you can see that let's just choose any particular year. So for an example, 2020. COVID year, right? And you want to see how did these BSE sectors perform in each in this particular calendar year. You can just sort this on the basis of ascending or descending order. We can see that BSE oil and gas, given negative 4.44% return. On the other hand, the best performing sector in this case, as expected, was healthcare, right? IT was a second runner, right? That's a typical analysis that you can definitely do. The possibilities are unlimited, as I said. You just have to explore it well. So that's typically the end of the topic-related webinar discussion. So we can now throw the forum open for a Q&A session where you can get your questions answered. You can do so by either typing it in the chat box or unmuting yourself to speak. Thank you. Okay, so there's a question in the chat box, how to make comparison and overlapping analysis between a MF and a PMS. So typically for PMS, you will have to provide the data if you have the data as with respect to its underlying, right? So for an example, you have the data as to what are the underlying stocks of that particular PMS. You can typically go to the portfolio section and you can actually build that particular portfolio of that PMS. So for an example, I'm just taking an example of let me just load in a stocks portfolio. So okay, so let's say these are the underlying stocks in a particular PMS. Okay, this is the portfolio of the entire PMS. Now you can actually load it. First of all, compare it with a mutual funds portfolio by using compare to portfolios. So for that, directly head over to compare to portfolios option and compare to portfolios side by side. So one on the left hand side, you will load in an entire stocks portfolio. And then on the right hand side, you can load in a mutual funds portfolio. One second. So so these are the two portfolios that I've loaded. The right hand side one is typically only a mutual funds portfolio, and you can check how does it change with respect to their performance analysis. Of course, from a start point, the asset allocation, the exposure analysis. How do each of these portfolios first of all invest into what all the sectors. So banks as a sector, it's 20% in this case, and in IT as a sector is the highest, 8.32%. Rolling analysis, drawdowns analysis can definitely be done. I think your question, a specific question was, how do you check position overlap? So for that, I mean, you can definitely, there's a roundabout way, go in the compare section, add it as a specific. So we do not have a specific dedicated position overlap tab here to check the position overlap between these two portfolios. But that is something that is already in the pipeline, but I'll show you the roundabout way to go to the compare section and just load in those portfolios right here in the compare section. So all the components of those two portfolios will get loaded. So for an example, load in a stocks portfolio right here. And then load in a mutual funds portfolio, which is typically the test client portfolio, right? So let's say this one. Once this is through, just go to the position overlap and you'll definitely get to see what are the position overlaps. So I think the previous one got deleted, but specifically what you can do is then save it as my list and then maybe some add those stocks. So for an example, there are 2-3 stocks in the PMS. So just go ahead and add those 2 or 3. So say for an example, ITC. Let's say so just add those components and then click on position overlap. And that will typically give you the position overlap. I mean, of course, with respect to the stocks, it won't come, but that's how you can definitely check it. There's another question in the chat box which says, is it possible to find the historical percentage of cash holdings of funds? So we show it as on a specific date. Historical cash holdings are not that are typically available. So the latest holdings into cash are definitely available. So if you just head over to the fund section and just scroll on the extreme right hand side, I mean, you go on scrolling, these are all the mutual funds and these are its cash exposures. So this is always on the latest, on their latest, basically current cash positions, current cash holdings. Historical basis is not currently available. There's one more question in the chat box which says how to make comparison and yearly performance of different asset classes. Okay, so so for an example, let me just show that to you. So go head over to the compare section, remove everything from this. So let me just show you an example of, I'll add just one particular mutual fund. So I've added the mutual fund. I will add one particular stock. and maybe something like a custom security, because you asked for multiple asset classes. I'll just go ahead and add in a gold, right? Of course, for that you'll have to first save gold as a security using my securities tab. So you first head over to my securities, upload this particular data of gold or any asset class that you want. So it could be something as random as a Bitcoin, right? You just have to add it by specifying the time series and the price series. Once you specify it right here, just click on validate and save, and your security will be saved. So for an example, I've already saved gold prices as a security, which is right here. So gold price is 3 years. This is something that I've already saved. So I'm just heading over to the compare section and adding that as a security. So for an example, this one, right? So once this is done, you can actually check how did each of these securities perform in the calendar years, right? So for an example, ITC gave in 52% in 2022. Gold, on the other hand, gave in 13%. Of course, this depends upon the what data that I've uploaded. And of course, the mutual fund gave in negative 1.66%. There's one more question in the chat box which says, can client data, say mutual fund holdings, be onboarded in the software? Yes. So we have something called as an RTA connection. So that's that's there right here in the client section. We have something called as a RTA connection, which will definitely help you in onboarding all of your existing clients. By existing clients, I mean all of your existing ARN clients who invest through you through your ARNs. Will definitely get onboarded. So what we typically do is our RTA team will get in touch with you, and they'll set up some auto forwarding settings on your email, and all the CAMS holding files, basically WBR4s, and the CARVI holding files, which is MFSD 203, will be updated of all of your clients on a frequent basis. CAMS happens on a daily basis, CARVI happens on a weekly basis. And then you can definitely see on the left hand side, as you can see in this case, we have a test ARN onboarded, and all of your clients will be appearing right here. So you just have to click on any of the client and his holdings will get loaded, and just click on run analytics, and that's how you can run portfolio analytics on any of the client's portfolio. This is typically for all of your internal clients. For your prospective clients or your external clients, we have 3 portfolio onboarding options. First one is the ECAS option, wherein you can just click on statement analyzer, and you can upload the ECAS statement. NSDL, CDSL, or CAMS ECAS statement. Just choose the file, put in the password, click on check file, and all the holdings will get downloaded. Will get captured basically. Once they are captured, you can then head over to the NGEN Markets platform again. Either go to the client section or the portfolio section. Just go to the portfolio section, click on add a new portfolio, click on load statement analyzer, click on this plus icon, and all the holdings of those of that particular client's portfolio will get captured, right? And you can definitely click on create and run. That's how you onboard a prospective client. You can also onboard these particular securities by adding them manually. If you do not have access to their ECAS statements, we also have a manual data add option. So that's that can be availed right here. So manual data adding, add client manually, and go on adding each of the clients and manually. That is also something that you can do. So there's one more question in the chat box which says, in the compare section, can we select the index, say Sensex, and see its underlying stocks performance for 1 month, 3 months, 6 months, and so on? Or can you please add this feature in the stock screener, and we can check any debt index performance? Okay, yes. So the underlying components of Sensex or a Nifty or any particular index is not something that is currently available. Our data provider is not currently providing us with that specific data. Basically, index weights. He's not yet providing us with that particular data. We can definitely look at introducing stock screener. We already had that actually in the past. I'll just note this down as a feedback, because we currently have mutual fund screener right here.
Yeah, so I will just hear, Kiran, I think you are used to the stock screener. I think you are using in LNT. So we're reintroducing the stock screener again, and we will be coming up with a lot of other stuff on the stock side very soon. Yeah.
Thanks.
Thanks.
And can we check any debt index performance? Okay, so with respect to debt indices, we already have a couple of them. So head over to the compare section, search for and indices. We have total 161. So for debt, let me just check. So a CISL bond is something that we have. We also have some from, I think, 10-year GSEC bond. All of that is definitely there. So these are there as debt indices. So you can definitely choose among these. So and we are continuously adding. So we are just working with our data provider to provide more and more data debt specific indices. And once it is through, we'll definitely be able to add them here as well. There's one more question in the chat box which says MF data is on client basis or family basis. No, MF data is that will be integrated on your NGEN Markets login, will always be on a client basis and not on the basis of a family. So basically, because this gets directly onboarded from your RTA connection basically directly from CAMS and Carvi, there's no structure called as a family portfolio there. Individual, it basically gets mapped on your PAN number. So for an example, in this case, you just click on this, the PAN number of this particular client is this one. So all the holdings will get captured specific to this PAN number. But you can definitely create family portfolios for analysis. I'll just show you how you can do that. So for an example, there's a Sharma family, right? So just click on load multiple clients. When you click on this checkbox, just search at the top, filter client space Sharma. And I'm assuming that these 4 are from one particular Sharma family. So I'll just go and add all of their holdings in one particular portfolio. I'll name this as a Sharma family. And I click on done. When I do that, all the underlying mutual funds in each of these portfolios will get added in one single, go, and you just click on run analytics, and that will actually typically run analytics of the, all of these 4 portfolios, right? That is how you can run it. Of course, the caveat here is that this does not get saved because this gets, updated on a daily basis or a frequent basis. These family portfolios will have to be created every single time you want to run analytics on them. These do not get saved. Okay, so that is something that you'll have to do. But capability is definitely there. There's another question in the chat box which says, is it possible to create a portfolio of SIPs into multiple funds instead of lump sum into funds? One second. Okay, so how portfolio analytics on this platform works is irrespective of the methodology. So whether was it a lump sum investment or was it a SIP investment, the analytics will always be hypothetical historical backtesting considering the latest holdings. So the manner of acquiring those units could be either SIP or a lump sum investment. Okay, so for an example, I'll just show you an example. So in this case, for an example, Atul Sharma. So these particular units that are currently there in DSP Tiger Fund, right, 2,993 units. Now, these might be acquired on the basis of lump sum investment that this client would have made or on the basis of SIP. Okay, ultimately, as on one particular date, the units are 3,000 around. And then when you click on run analytics, it will actually run an analytics assuming that these are the current holdings, irrespective of the fact have they gotten acquired on the basis of SIP or lump sum. So that's how portfolio analytics works on this platform. I hope this clarifies your doubt. If not, please ask, you can definitely unmute and ask your specific query. If you want to, create multiple SIPs and check basically for multiple funds, how does the SIP performance behaves? That is something that you can definitely do. So head over to the compare section, and we have, let me just load in a set of some funds. So Yeah, so these are some 5 large cap funds, and directly head over to monthly SIP analysis. You can definitely check how the SIP performance would be of these particular funds over a time period, assuming a notional installment amount. So this is something that you can definitely check.
Any other questions? You can just unmute and ask. Prajakta, if there is no other questions, you can just wind it up.
Yes, sir. So thank you everyone for joining in. You will definitely find the recordings of all of these webinars on our YouTube channel. They are updated on a very regular basis. So you will also find the recording of this particular webinar updated by the next week, Wednesday or Thursday. So you just head over to our YouTube channel, which is NGEN Markets. You can definitely check the playlists where we have a dedicated webinars playlist. And you can see there are 72 videos that have already been uploaded. In addition to that, you will also see we have NGEN shorts, which are typically 1 odd minute videos, which will help you in navigation of one particular, each of the particular small sections on NGEN Markets. If you get stuck, you can definitely refer to this. Alternatively, you can definitely reach out to us on support@ngenresearch.com for any particular queries or doubts that you need resolution for, or connect with us on our landline.
Can I
office
just
number.
ask one query?
Yes,
Sorry,
yes. Please go ahead. Sorry. Please go ahead.
In the market snapshot, when I'm trying to put the Nifty and the Sensex graph together, the comparison is very meaningless because of the difference in the scale. Can you
Correct.
change it by percentage so that we can put both in the same and see it? Because seeing both together sometimes is necessary. But that is never meaningful when we put it here because you have the levels by the side.
Okay. Okay. So I mean, so specifically, if you want to, check Nifty and a Sensex, and because I mean, for obvious reasons, they are very overlapping. So what you can actually do is untick rebase. Maybe that will help because I mean, of course, the levels will be then different. So basically because Nifty is somewhere around 19,000 and Sensex is around 66, right? So will that
this
suffice?
doesn't make much sense because of the levels of the Nifty and the Sensex.
Correct.
But if you keep the side, the x-axis by percentage, the graph we get will be totally different. Because in another site, I saw it that way, and that graph made more sense to me. When you see it separately, yeah, it is useful, but I don't know. I just wanted to ask it as a suggestion.
Sure. Here, hi, this is Arunab. So basically, when you just click on the rebase button, so what you're seeing in this case is actually percentage growth, because obviously both of them are starting at the same exact point. So you can see the change that happens as a result for both. Now, of course, on here, it's not just 2. You can put as many indices as you want. So you either look at it in terms of percentage or you look at it in terms of levels. So we've given you the choice to kind of flip between both.
So if you click rebase, you get it on the same scale. Okay.
Yes. And for example, So some people, if they just want to look at Nifty without anything else, there's no point rebasing it. So let's just move everything but Nifty. And in this case, you're actually just looking at a Nifty level chart. Rebasing will obviously only help when you have more than one.
Oh, then that will be helpful. I didn't know that. Thank you.
Thank you.
So thank you so much, everyone. Thank you for joining in and have a great weekend ahead. Thank you.